All right, just hit record and thought I would stand in front of the camera here and just do a quick video for the first time to talk to you about Tesla and Ford. So if you're a follower of tech in the stock market and if you've been paying attention, then you've probably seen headlines that Tesla this week is bigger than Ford in terms of market cap. And I wanted to spend a few minutes just to put some perspective around this because, you know, it's the kind of headline that gets a lot of clicks. Oh, Tesla's bigger than Ford and Tesla only makes a few cars and Ford makes millions and this is absurd. It's great for headlines. It gets a lot of clicks and it unfortunately causes people to think about the stock market and think about investing in, I believe, an ineffective manner. So let's just go through this for a few minutes and I'll put some perspective around my 20 plus years of investing, mostly long-term tech investing. Always worth reiterating that when I talk about investing, that by default means long-term. Because in my opinion, if you're going to do well in the market, and I don't think I can out-trade anybody, I have to outthink people in terms of the long term. And that's what I do, and that's what I've been doing for over 20 years. And I'm not claiming I'm the best in the world at this, but it's just the way I do it, and it seems to work. So I want to talk about Ford and the comparison that's being made to Tesla lately. So Ford is a company that, obviously public company, and they made something like, and forgive me if these numbers are wrong, I'm just referencing articles that I've read, that they make something like 6.5 million cars per year. And if you look at Tesla, on the other hand, they are, well, let's just go with their run rate. So who cares what they made last year? They're currently making about 25,000 a quarter. So let's call that 100,000 cars per year. So that's a huge difference, right? How could this company possibly be worth more than this company? And I'm not standing here to argue that this should be the case or not. All I'm going to really argue here is that this is an incorrect framework for looking at stocks, and I'll show you why. So let's just say, for perspective, let's say Ford can make $1,000 profit on a car. Now, I don't know if that's reasonable. Should they be doing better than that? Should they be doing worse than that? But it seems to me that if the average car in the United States is somewhere in the $30,000+ range, making $1,000 in net profit shouldn't be that difficult. If it is that difficult, it's really not a good business to be in. Obviously, people would say the auto business sucks, but whatever. I'm suggesting it should be possible to make $1,000 profit per car for Ford. And if you do the math on that, obviously it's really simple. Then you just carry the 1,000, as I incorrectly draw here, you carry the 1,000, you get from 6.5 million, you get 6.5 billion. So that would be the profitability level of Ford under that scenario. And if you believe that this is a company that's going to be around for a long time, not a growth company really, think more like the Coca-Cola of the car business. They're just there and they're stable and they're consistently profitable. Then let's say you're conservative and you put a 10 PE multiple on that. Or let's say you're less conservative and you put more like a 20 PE multiple. So 20 times, 10 times to 20 times. So you're looking at a market cap that should be anywhere between 65 on the low end billion and 130 billion on the high end. So something like that, if you believe that Ford can make $1,000 a car and that they can continue to make this number of cars essentially out into perpetuity, and that's what they would be worth. So if that was the case, obviously Tesla wouldn't be worth more than Ford. So it's worth stopping at that point. Just delineate the conversation, take Tesla out of the equation, look at Ford and go, why isn't Ford worth that much right now? What's wrong with the business? Are people concerned about the long-term future of this business? Are people concerned that they can't actually make that profit? What's the real issue? Are there other pensions and financing arms, and are there other problems in terms of the capital structure or whatever with Ford that I have not spent time on? So I'm not claiming to know any of this, but this is what the market's looking at. And if this valuation is not happening, then something with this equation is wrong, or there's something extraneous to this that the market has a problem with. And that's unrelated to Tesla. So now let's look at Tesla. You got 100,000 cars per year, but we all know this is not a story about the Model S and the Model X. Those were the cars at the high end of the market to get them going. And they're not profitable yet. The idea was to seed the profitability so that Tesla could expand. I would replace profitability with seed the market cap so that Tesla could expand. So Tesla can now go out and raise the money and do what it needs to do to build things like the Model 3 that are coming. Now, disclosure, I'm long Tesla. I've been long Tesla for a few years now, back from about the $55 mark, something like that. So I'm pretty happy to see it, around the $300 mark, but that doesn't mean I'm right yet long term. We shall see. Anyway, all that to say, let's say Tesla is making 100,000 cars a year right now, and it's not a stretch to say, obviously they're in growth mode, they're building, the Model 3 is not even out yet, they've got hundreds of thousands of reservations for this new car, so in a few years, whatever that means, let's say these guys are really at 1 million cars per year, okay? And that is just the car business, which we'll touch on in a moment. And if you're optimistic-ish about the profitability and you think, hey, look, Tesla's going to re-engineer the entire production line, they're going to make it more automated, they're re-engineering the way cars are distributed, there's less service requirements, they're doing more vertical integration, hey, these guys should be able to do a 10% net margin on cars once they scale up. Well, that's 10% net margin. First, we have to do the revenue calculation. So let's just assume that the average car between all their models is something like $50,000 a year, not too absurd. Then you're getting a business with 50 billion in revenue, okay? And again, if we take a 10% margin on that, we're looking at a 5 billion per year potential profitability. That's just the kind of simple math somebody might go through, back of the napkin kind of thing, or front of the chalkboard, to get a sense of what kind of profitability might happen if they achieve that level of profitability, that level of scale, and obviously they plan to go much beyond 1 million cars a year, and we shall see about the profitability. That's always in question. But that's the kind of thinking that would happen. Now, if you could do that and you were to put a reasonable multiple on it, let's just start with this same kind of multiple. So if you apply that just to Tesla, then you're looking at, 50 to 100 billion in market cap. And obviously Tesla's more at the low end of that range. So begs the question, why does the market not believe in the high end of this range? It's a higher growth company than Ford is, right? So you would think a 20 times multiple would be much more logical for a company like Tesla, but the market's not even assigning that kind of value to Tesla yet. So doesn't mean the market's right or the market's wrong. We've seen the market be wrong long term about a lot of stuff, Amazon, Facebook, Google, and I say wrong term in that for years and years and years, these stocks, people wrote about them being massively overvalued, and that was wrong. And every year that went on, as these stocks climbed, they continued to be undervalued, which is why an investor in Netflix or Facebook or Google or whatever tended to outperform. Apple, another good example. So that is the way I look at things. What could the market still be missing about either of these companies? And in the case of Ford, they could be missing the idea that people don't care about gas cars 20 years from now. And all cars will be electric, all cars will be autonomous. People won't really own cars. You'll borrow cars as you need them. And this company has a massive, massive headache to overcome in terms of changing the power plant, creating all of the software necessary to do all of the things that kind of more Uberish, if you want to think of it in terms of mobility as a service. Where are they going to get all the batteries to be able to power these cars if they transition them to electric vehicles? Whereas a company like Tesla, it's built from the ground up to supply massive numbers of electric vehicles. So building a gigafactory in Reno, Nevada, and then of course planning to build many, many more of them, which will require a lot of capital. But that's the kind of thinking that a company like Tesla has done in order to justify its market capitalization and in order to justify even the idea that 10 years from now, we may look back and go, wow, Tesla was actually undervalued by a lot. Now, that doesn't mean it'll happen, but you just have to think about the possibilities. Well, obviously, Tesla could screw things up. Tesla could have a massive recall. They could be unable to finance themselves and just go bankrupt. That could happen. But at the same time, they could execute well. They could generate substantial profitability. They could be one of the only major companies out there able to supply enough batteries for vehicles, able to secure enough batteries for vehicles to grow, to do full autonomy, to do mobility as a service, to additionally sell energy in terms of battery pack storage to the grid, to homeowners, to commercial and residential operations, and solar roofs. All of the stuff that Tesla's been working on is like additional to what we've been discussing here. So this is getting much longer than I intended it to, but hopefully it's of some value to some of you. I'm going to wrap up and just say this. I've been investing in technology for over 20 years now, and I haven't always been right. I've made a few great calls. I've made a few crappy calls. More than a few, I'm sure. But the key to me is you must think long-term. What is the market not willing to consider? And Wall Street just typically won't go out on a long-term limit. It's not part of the DNA. It's not part of the business model to think very long-term, which is why I think that if you stay away from trading stocks and actually become an investor in great companies that have long-term opportunities and are executing well on that vision, then you'll do better, because you will be able to look at a picture and you'll be able to see the opportunity 10, 20 years out that other people just aren't willing to consider in their thinking. And so then you get headlines all about this kind of stuff. Ford has been passed by Tesla in market cap, which unfortunately strips away the real value of the conversation, which is about where this business is going, that this business may not be able to go or unwilling to go because of legacy and board of directors that are uncomfortable making major investments in the kind of things that these guys are doing that would affect their profitability over the next few years, which would make Wall Street absolutely hate them. And I've seen this over and over. So companies like this tend not to be able to just grab their balls and make the big bets that companies like this do make. And yes, I just said grab their balls on camera, and that's okay. So hopefully that's been useful to you. Over and out.